So if you run a consulting business, e-commerce business, or any business, retail business, you know how annoying it is when money gets held. Okay, it happens all the time. You send a wire, it gets held by the bank, or the wire's incorrect, so you got to do a trace and then wait till it comes back. You send a PayPal. PayPal from the sender side account gets blocked, and they got to answer a bunch of questions. And then the receiver account also gets blocked because they also have to answer a bunch of questions, and they triggered some AI thing. You send a wire to yourself, from like the same bank brand, and they will also, maybe hold your money. You got payments going to Stripe, and then, Stripe holds your money, and then Stripe deposits it into your bank, and then your bank holds your money. What do you do in those situations, when they hold your money? It happens more than you think it does. Like, I mean, you probably know at this point that it does. If you run a successful business, and if at this point you still don't have credit cards, that's crazy, because it's ultimate borrowing power. It's borrowing power. Most people don't have access to even like $500. Bro, let's say bare minimum, this is like $5,000, and I'm underballing it, bro. $5,000 is a lot of money to have access to for even people in the Western world in terms of quick lump sum. You get what I'm trying to say? Average person doesn't have $5,000 lump sum. They don't. At the end of the month, all their money's gone. All the expenses for day to day is gone. It wipes them out. But you have $5,000 lump sum to do something to either cover costs, okay, which is very important, or to make money from. Now, ultimately, it's great to cover costs because, again, if your bank holds money for 10, 20 days, whatever, use your credit card, pay off the balance. Use your credit card, pay off the bill that's due, and then within those 20 days, you have grace periods up to 21 to 50 days, so you don't even have to pay. And if you have to do a cash advance too, whatever, right? Because ultimately, you're only going to borrow for the amount of time that you need for your money to finally come in. And usually those things have indicators. It's like, 5 days, 30 days, 40 days, whatever. Let's say you have to borrow 60 days. Let's say it's $1,000, $1,000 times, okay, you got to understand, my bad, that it's the interest rate. So 20% times 20% divided by 365 days a year times the days you borrowed times the amount. And at that point, you're paying only dollars to borrow that money. And it's literally life or death for your business or for your situation. And all you have to do was, again, pay a couple dollars at most. And at the same time, you can also use this to scale or to start something that has high profitability, okay?